So the most difficult part of being an investor arguably is making the decisions between what to invest in. The number of choices you can make within the stock market is virtually unlimited, and as a beginner investor, it is really hard to actually know whether you are on the right track or not. So recently there have been a number of ready-made stocks and shares ISAs that take away the most difficult part of investing, which is actually choosing your investments. So in this video, I'm going to be comparing some ready-made ISAs against what I do, which is open a platform like Trading 212, which has very, very low fees, pick a world fund and just invest into that and forget about everything else. Now, if you would like to sign up to Trading 212 and receive a free share worth up to £100, then all you have to do is to use the link in the description box down below. Alternatively, if you've signed up less than 10 days ago to the app and haven't received a free share, all you have to do is click the 3 horizontal line menu here, scroll down until you see the use promo code section, and in this section you can use my personal code JUBAIR and you should receive a free share after that. So for the purposes of this video, I'm going to go into Trading 212. You can pretty much use any good UK based platform too. This is not a recommendation for the broker, as we will later go and compare the different brokers and see how much more expensive they are than this. I personally have invested into the Vanguard FTSE All World, which we could use as the benchmark to compare all these other providers. However, I'm actually going to go for a different world fund just to show people that, I'm not a Vanguard fanboy or anything like that. And there are always more providers that will give you the same coverage that isn't Vanguard themselves. Now, if I type in world in the search menu, I can just scroll down and go into this one here, Invesco. So this is the Invesco FTSE All World. And what we could potentially do as investors is to invest into just this one fund that will basically cover pretty much the entire world stock market. This is also an ACC fund, which means it is an accumulating fund. So any dividends that are paid out from the companies that this index tracks, they are reinvested back into the fund and the fund grows as a function of time. So basically all you're doing is just investing into this one fund and not worrying about anything in the future. Just whenever you get your money, you can actually keep buying more and more shares of this. Now you can see, importantly, this fund over the past year has returned investors 17.68%. So we're going to be using this as the benchmark. Now, if any of our other providers can beat this, then they are a good investment minus the fees. So the fees become the second most important thing to talk about. Now, if I go into the information document pack of the fund, so Invesco FTSE All World, we can actually find out what the total expense ratio is. So here we find out the fees for this fund. Now, the fees are going to be really important because higher fees means more money being taken away from your gains. And we'll see with some of the ready-made stocks and shares ISA how high their fees really are, and some of you might even conclude that these are pretty much a bit of a scam. So as you can see here, the ongoing charge for this fee is 0.15%. So based on a £10,000 portfolio, you would be expecting to only pay £1.50 for actually holding this fund. Now, the reason why I use a platform like Trading 212, in fact, even Free Trade will actually give you these ETFs free of charge, so no platform fees. Like I said, I'm not just trying to show off Trading 212, but a lot of these newer apps like Trading 212 have absolutely zero fees that you are paying for, no platform charges, and no charges when you actually buy ETFs denominated in pounds. So for example, any of these funds here, the Vanguard ones you can see here, when I buy them, there's no fees to actually buy them, there's no fees to hold them. In fact, if you buy from Vanguard directly, you are paying a platform fee. So essentially with Trading 212, I can invest into the entire world stock market and make my life as simple as possible by investing into just one fund. And this will cost me just 0.15% as a fee the entire year. And in the past year, this would have returned me 17%. Now, because Google is pretty much where we first go in order to find out more about stuff, I have already made the search ready-made stocks and shares ISAs, and I'm going to go through the first few search results because realistically, most of us are probably going to do the same. So the first thing that comes up is Hargreaves Lansdown, of course, because they are also sponsored, so they are paying Google a whole lot of money in order to be higher up in the search results, something to take note of. Now, I'm not saying that Hargreaves Lansdown is a bad platform by any stretch of the imagination. I know that they are a great platform because they are highly reliable and they have great customer service. Now, if this is something you are willing to pay more for, then absolutely go for it. I am not knocking this platform at all. I am not hating on it whatsoever. So the main thing is that this is a stocks and shares ISA, and typically within a stocks and shares ISA, you pick your stocks yourself. Otherwise, you could go with something like a cash ISA. But the powerful part of the stocks and shares ISA is that your funds are invested into equities such as stocks and shares, which in other ISAs you can't directly, at least, get access to. So by now you all know probably that you get a £20,000 per year allowance for your ISAs, and this includes stocks and shares ISAs. You can mix and match however you want, and in this year you can have more than one stocks and shares ISA. This makes it one of the world's most powerful ways of generating wealth tax-free, and the UK is very generous with £20,000 per year. So if you keep scrolling all the way down, we can see there are two ways in which we can open a stocks and shares ISA. The first is the conventional way, which you do it yourself. You can pick whichever stock you want, and of course I'm not going to be covering that in this video. The second is the one we are interested in, and this is a ready-made investment. So basically you are paying Hargreaves Lansdown and its many fund managers to take your money and to invest into it so that it could beat the markets. And if we know anything on this channel already, is that most fund managers fail to beat the market year after year after year after year. It's pretty much been a proven case. Active fund managers seldom beat the market. But in any case, let's go into it and see what the details are behind this. So a quick overview of what their ready-made investments are. A ready-made investment is an all-in-one portfolio of funds created by experts, making them a simple option. Like I said in the beginning, if you just invest your money in this, you don't have to actually think about what stocks you have to pick and wondering constantly if you are making the right decision. Should I go with S&P 500? Should I go with all world? Should I just do emerging markets? And every day looking at your portfolio and thinking you made the wrong decision. So there definitely is utility in going with something like this. It gives you the ease of mind. But my question is, how much is that really worth to you? Are you willing to pay a whole lot extra for this service? You can get started with as little as £100 or £25 per month if that is a direct debit. So that's not too bad at all, actually. They do say that this investment is right for you if you're looking for a team of experts to basically manage your money day to day. They also do warn that it's not suitable for anyone investing less than 5 years, which is fair enough. And of course, they're always advocate for having a built up cash savings or emergency fund. Now let's just go through the service to actually find out how much this costs. So you can first get to select what you want to invest. Of course, let's go for to grow my money because that's realistically what we want to do here. Now, there are two options here. The first is expertly managed and the second is track the market. With expertly managed, Hargreaves Lansdown fund managers select the experts who aim to beat the investment market. So let's actually go with this one. You can see that already the fund management charge is up to 1%. So on a £10,000 account, that is already £100 wiped off. But however, the portfolio is selected by experts, so that could be a good thing for you. The second is track the market, and I believe this is a passive form of investing, and this does have a fund management charge of 0.3%. So let's go with expertly managed here. Now there are four options here. There's adventurous, moderately adventurous, balanced and cautious. For me, I think anyone under the age of 40 should always go with adventurous. Essentially, the less cautious you are, the more allocation I expect for there to be in bonds instead of equities like stocks and shares. So let's quickly read through it. So it's expertly managed, as we know. Adventurous is the highest risk level. This fund will maintain an adventurous approach to risk, and of course it will aim to grow your money over the long term. So now let's look at the charges. We know that with Trading 212 we can have one fund that tracks the entire world for just 0.15% fee per year. Now with Hargreaves Lansdown there is a fund management charge of 0.91%. Then there is a Hargreaves Lansdown account charge of 0.45%. This brings the total cost to be 1.36%, and on a portfolio of £1,000 that is a £13.60 charge, which actually doesn't seem too bad to me, but 1.36% is more than 1.1% higher than what we are paying with Trading 212. However, if it can beat the market, I am more than happy to actually give them 1.36% of my money and not really worry about anything. So let's actually see how they performed. Now this is where it gets complicated because they don't actually have figures for performance, and also this is a very new fund, so there isn't tracking of long-term performance. Now what we can do is to go into the fund breakdown and figure out what they are actually invested into. You can see here it says the fund is composed of carefully chosen investments that are a mixture of shares from both the developed markets and emerging markets. Now, in an all world, you do get both the emerging markets and developing markets. So I don't see how specifically different this is going to be. You can see 15.8% emerging markets and 84% developed markets, quite a bit of weighting in emerging markets, which is good, I guess, for the long term. So we can also go into their top 10 holdings. You can see the majority of the fund is invested into Hargreaves Lansdown US Fund Z, which is something very similar to the S&P 500. And you can see the second biggest holding is the Legal & General US Index C accumulating. Now, I know this isn't a perfect comparison, but if we go in and find out more about the Hargreaves Lansdown US Fund, we can have a look at its performance. And over the past year, this fund would have been responsible for the majority of the gains made by that adventurous fund. So over the past year, this fund has returned investors 19.31%. However, like I said before, this isn't the biggest holding of the fund, so it's very difficult to actually find out what the fund made over the past year. And because it's so diversified, it has holdings in Japan, America, and many other countries, we don't actually know at a glance what the actual performance was. So I can only speculate and think that it has to definitely be less than 19%. Now, let's say even if this fund made 18%, which I'm sure it didn't overall, that would be pretty much neck and neck with our Invesco FTSE All World. However, when you consider that Hargreaves Lansdown charges over 1.3% in fees, you would probably realize that this actually underperforms the market once again due to its high fees. Now fine, maybe Hargreaves Lansdown is too expensive. Let's check out some other ones. So the next one is from Lloyds Bank, a very well-known bank within the UK. Again, if you wanted to, you can read all about it, but pretty much it's going to say the same stuff. You know, the benefits of having a stocks and shares ISA with them. So this fund again is also managed by experts, so you're going to be paying a bit more for that privilege. So as you can see, even with Lloyds Bank, there's this whole risk level thing where it is up to you as the investor to see how much risk that you are willing to take on these investments. Now you can see again, there are three in this case, risk levels. Cautious, which is their lowest risk fund. Now remember, just because something is lower risk does not mean that your capital isn't at risk. You can see with their cautious funds that, you know, 61.2% is in fixed interest, only 25% is in equities, 6.2% in properties, and 7.4% others. So it's a very diversified in terms of different asset classes. With the balance fund, you can see 55% is in equities and the rest is put elsewhere. But of course, like I said, for me, anyone under 40, you probably should go all in on stocks if you want to get the most returns. Remember, this is not financial advice. Now, even with their progressive fund, you can see only 80% is actually put into equities. So you're not getting all your money put into stocks and shares, which you could otherwise do manually via a stocks and shares ISA. Now, what I like about Lloyds Bank is that they make their annual charges really transparent. Now you can see that the three funds are priced differently. Their progressive fund is the most costly. You have a £3 fixed monthly cost in addition to a 0.3% cost on the fund. So for example, if your investment was worth £1,000, £39.70 would go into just fees, which is actually really high. Of course, because the fees are mostly based on a fixed number, if you have a bigger portfolio, it will scale down. For example, with a £10,000 portfolio, you'd be paying £73, not 10 times at £390. So it does actually scale down in that case. But like I said before, something like Trading 212, you'd only be paying around £1.50 for a £10,000 fund. So this is still about 50 times more expensive. Now, again, like I said, I wouldn't mind paying the fees if the performance was higher than what we're using as the benchmark, which is the Invesco FTSE All World. Now, luckily, Lloyds Bank actually gives performance numbers. We can switch the graph here down to 1 year. So by default, these are 5-year numbers. We can also see the profile is very similar to something like a world index. We can see in the 2020 COVID crash that the crash happened. Now you can see that the three funds are quite well correlated. However, of course, the orange one has been performing the best. So the orange one is the progressive one, of course, the highest costing one, and that over the past year has returned investors 15.55%. Now remember, when we just invest into the Invesco FTSE All World, that has a return much higher at 17.68%. So you're already losing around 2% there, and then you're losing about £71.50. Taking away the charge for the Invesco FTSE All World, you're paying another 71-ish pounds to have the privilege of underperforming the market. Of course, the question would be that in longer terms, maybe it can actually outperform the market. However, we saw that over the past year, Even the worst fund manager would find it pretty difficult to actually get less than 10% in the stock market, because the stock market overall really did incline this year. So of course, long-term performance I can't speak about, but if we look at just the past year, you would have underperformed and paid more in fees with going into something like the Lloyds ready-made stocks and shares ISA, or even Hargreaves Lansdown for that fact. So maybe they were just a couple of bad eggs, maybe they both underperformed, maybe you could find something that actually outperformed and the fees were justified. So let's go into Halifax, which is actually, fun fact, my bank of choice since I was 16, and I bank with them every single day. However, I don't invest with them because I generally know that their fees are going to be too high. So let's go in and see some of their ready-made investments. So again, I'm going to skip over all the benefits. We already know about the benefits of the stocks and shares ISA, but with Halifax, you can start with as little as £50 per month or a £500 lump sum, which I have to give it to Hargreaves Lansdown is much better at £100 lump sum or £25 direct debit. So there are 3 levels, again just like Lloyds Bank. There's cautious, balanced and progressive. By now we'll go into just progressive. You can see that pretty much it is exactly the same as Lloyds Bank. The account fee £3 a month, ongoing charge of 0.23% and transactional cost of 0.14%. I actually do think it's the exact same fund, and my suspicions have been confirmed because they're using exactly the same graph here with the exact same graphics and the exact same return. So yes, these major high street banks are actually getting their funds from the same place. In fact, if we go into the fact sheet, we can see that these are invested into Scottish Widows Managed Growth 6L Accumulating Fund. If you want to see the top 10 holdings, they're here. Scottish Widows Unit Trust here and a bunch of other stuff. Can't say I'm too surprised, however, because all of these high street banks, they really do lack creativity and it seems like they just copy off each other. So just to prove that not all UK banks are equal, let's go into the Barclays ready-made investments. Now I get why people would actually go into these investments. First of all, if you haven't already started investing, then putting your money in a bank account, you'll see that most of your money is lost to inflation, and any sort of investment is miles and miles better than just putting your money into something like a cash ISA or the bank account. Second of all, these names such as Barclays, Halifax, Lloyds, anything like that, they're very well known, very reputable and very trustworthy. So I see why people would just go into them, because of course you don't have to worry about, the broker going offline or the broker failing and things like that. So sometimes it could be worth, paying a little extra for that peace of mind. So I'm not at all knocking any of these investment providers. The third reason is because it is very simple. You can see ready-made investments, a straightforward way to invest. Very, very simple, very easy to use. If you go into the branch, I'm sure someone will actually help you physically. Now with Barclays ready-made ISAs, there actually is 5 options. You go all the way beginning from defensive, which is 18% stocks and shares, 16% bonds, and 66% basically cash and money market funds. The cautious one is basically 38% equities, 29% bonds and 33% cash and money market funds. Now the balanced one is 56% equities, 42% bonds and 2% cash and short-term bonds. Growth is 73% in shares, 25% in bonds and 2% in cash. And adventurous, the one that we would most likely go to as a younger investor, is only 89% in shares, 9% in bonds and 2% in cash. You can also see the performance over the past 5 years. You can see from 2019 to 2020, the fund only returned 0.05%, so you'd actually be losing money to fees there. In 2020, it was a great year, over 20%. In 2021 to 2022, only 0.05%. Again, another loss in terms of fees. And in 2022 to 2023, 6% only, which is pretty poor. However, in the stock market, you could have been in the negative, so I guess it's not too bad there. And since 2023 to 2024, a return of 13.5%. Now, of course, the last figure I assume doesn't include the full year that we've checked with our Invesco FTSE All-World. So the return could be a bit higher than that. If we go into the fund sheet, we can see that Barclays has created its own fund here, the Barclays Wealth Global Markets 5. You can see a lot of it in the iShares Core MSCI Emerging Markets, a lot of iShares, the S&P 500, North America US Index. You can go through the list yourself, but it seems like all of these investments, you could actually invest for yourself. We can see that the ongoing charge for this fund is 0.45%, which is around 3 times higher than the Invesco FTSE All World. So again, under fees, you can see that the fund charge is 0.45%, just like we've seen in the document. However, Barclays has a customer fee of 0.25%, which goes down to 0.05% if you hold more than £200,000 in your stocks and shares ISA, which is of course going to take you many years to achieve £200,000, whether it's through deposits where your limit is £20,000 per year, or if you're super lucky and you get it through capital gains and dividends. So overall, out of these ready-made ISAs, Barclays does have the lower fees. However, it is still significantly higher than the Invesco FTSE All World. And as we can see over the past year, this has returned over 17%. This number is still changing, by the way, because I'm showing you this live. So ultimately, it is up to you to decide if you want to go for ready-made investments. Just know that a lot of them have very high fees that takes away from the performance overall. And if you really factor it in, you could always get something on your own like a FTSE All World that will actually track the whole market and most likely outperform these ready-made stocks and shares ISAs. So make sure to check out some of my other videos and I'll see you in the next video.